Welcome to the Mining Store podcast, Australia's #1 crypto mining rig solution provider, covering the latest news and insights into macroeconomics, cryptocurrency markets, altcoin news, and technical analysis. And now, without further ado, let's hand it over to the miningstore.com.au team.
G'day everyone, welcome back to another podcast by Imperial Wealth and Mining Store. Today we've got a pretty stacked episode. We're going to go through community questions first this time, so we can get a bit of discussion around that. Got some really great community questions that we're going to cover. After that, we're going to lead into a market update by Tony on general economics and the global circumstances. We've got a fundamentals and technical review by Mitch. And Theo is going to jump into some of the mining statistics that are happening at the moment, revenue, as well as some altcoin miners that we've got available on the market as well. So let's jump straight into it. Taylor, do you want to run through some of the community questions that we had from last week's podcast?
Yeah, of course. And, as always, we really appreciate people reaching out, engaging with us. It always gives us, something to talk about that people are interested in, but also expands, our sort of concept as well. We've had a few sort of come in. I think I've taken a few picks, and one of the ones that we sort of had a discussion earlier that we thought was pretty interesting was the tokenomics behind minting NFTs or creating shares within miners. It's obviously pull funds together to purchase larger amounts of miners and share in those costs. So I thought it was something we could have a bit of a general discussion about and expand on.
Yeah, it was funny when you mentioned it, Taylor, because it's something we have actually been working on in the background for quite some time. I mean, obviously, we're limited to the amount of development that we can do and offer. And our priority at the moment is definitely getting our Imperial Wealth branding out, which comes with new miner management software and a whole range of new services that brings the trading academy over into the same place as our mining. But nevertheless, this is something that we are doing, and like essentially what it would look like would be someone would be able to just buy 1 terahash. They don't have to go and spend $15,000 or $20,000 to buy a full miner. They could simply buy a single terahash in mining and pay the equivalent power bill for that. And receive the equivalent of 1 terahash worth of revenue from it as well. So it's definitely something that's in the pipeworks. We don't have an official launch date of any sort, but it's something we want to kind of build out and bring to people. We understand not everyone can afford that entry of 15 or 10,000 or whatever it might be for a miner. We'll release further information on it once we can. But yeah, really good question from the community.
Yeah, exactly. I thought so. Another one I think Theo and I'll probably chat about, I guess, in regards to obviously altcoin miners sort of down the track. That's all the questions we've got today.
Yeah, absolutely. I think the other ones were Ethereum merge, obviously a really hot topic at the moment. There's some misconceptions about what that actually means in the market. So we're going to cover those a little bit later, make sure everyone's up to date and understanding what's going on there. A little bit about the implications of that too. And then, of course, altcoin markets. I mean, things are heating up a little bit in the market at the moment. We're starting to see some altcoins get a bit of flavor in them. We're starting to get Bitcoin and Ethereum pushing up to those exciting levels again. And that kind of opens the doors for some pretty profitable altcoin miners, which we have been able to get our hands on as well. So Thea's going to jump into those a little bit later. But Tony, let's hand over to yourself and go through a bit of a market update and global economic update for us.
Yeah, sure. So it's been a positive run in the market, I guess, for risk on assets. The S&P 500's up roughly 18% from its lows. So we have seen like a risk on rally across cryptocurrencies, equities and stocks initially. This month, there isn't actually a Fed interest rate decision. So there's going to be other economic factors kind of driving the market and the sentiment this month until the September meeting. The main themes that are driving the market at the moment are the tensions between the US and China, inflation potentially peaking, and then also we have a lot of economic data points suggesting that there is a economic slowdown at the moment across the globe in the US and China as well. So, the recession fears are still there or thereabouts. So I guess that's really going to be what's driving the market. Now, to start this week off, the dollar index has seen an initial rally to the upside. That's possibly due to kind of escalating tensions between the US and China. So we have to see whether or not the dollar index prints a new high. On the long-term charts, we've highlighted a number of times that the dollar index has potentially peaked. There are a number of technical breakdowns there. So we just need to see and give it some time to see whether the dollar index is just a corrective rally to the upside, or whether it's going to kind of continue to new highs. We've highlighted previously as well the inverse correlation between the dollar index and Bitcoin on a number of occasions. So if the dollar index does continue moving to new highs, then that will put downside pressure on cryptos and equities as well. So, time will tell. We need to give it a couple of weeks maybe just to see if the dollar index has, corrected to the upside and it's actually in a more of a longer term negative trend, or whether it's going to continue moving to the upside. So yeah, time will tell on that front.
It'll be interesting to see what happens. If the DXY does drop below that kind of 100, 105 territory, it could result in a bit of a rally that a lot of people aren't expecting to see. So keep our eyes on it. Obviously, we'll be keeping everyone up to date through these podcasts. But let's see what happens.
Yeah, I thought I'd just quickly add on that because we do have some technical stuff in the update. We showed the parabola, I think, being broken, in the last 2 weeks or so. We actually did fall below 105, Will, briefly. We had that really strong support level. It kind of tested it and bounced really strongly and hard. I know Tony touched on it with the Chinese economy. Me and Taylor were discussing it today. I think the demand for the US dollar is obviously off the back of the Chinese economy kind of shrinking, and the policies that their government's implementing has obviously meant that a lot of people have kind of moved to the dollar, which is evident in the last few days. This is a daily chart, and you can see kind of 1, 2, 3 days of positive growth in a row. So I did mention that you can kind of see this ascending channel that's been forming since the start of almost 2022 that shows the uptrend. I think that's a bit of a better representation of what's kind of been going on, and you can see it kind of touch the channel, lower the bottom. We faked out at the bottom of the channel, and then so it's just a question of whether we continue, whether this was a true fake out, or whether we can reverse back down below that 105. But we might as well just move on to the fundamental stuff as well. Just touching on the stock market here for our members, and if you guys want to pause the video to a nice read here about kind of strategists and what their opinions are, and they're divided on where the stock market's heading. I think if you asked any strategist in any financial market, crypto or stocks, a lot of people would be divided about whether this is the bottom, where we're heading, if there's more pain to come or not. I think the main thing to point out here is there's still great uncertainty, like in the direction of the financial markets across the globe, and to tread very lightly, not diving headfirst, being, this is the bottom, I'm going to deploy all my capital. This is why in our trading academy, we have certain strategies in place to kind of capture lower prices if we see them. We've already got really good prices on Bitcoin and Ethereum, so we're in a nice position. But just to kind of be aware that, maybe the worst hasn't been seen, and maybe it has, but just something
just on that, Mitch. So there's been a lot of conflicting news coming out on Twitter about the S&P 500. Some analysts are saying that when the S&P 500 has rallied more than 50% from its low, then that's the end of the bear market. So there's never been a rally that's taken up more than 50% of the correction, and the market hasn't continued to new highs. However, this week, Michael Berry has come out and pointed to 2 different occasions previously in history where the market has rallied 50% and then continued down into a bear market as well. So the jury's still out.
And it's a great point, because what people are trying to break down, right, is whether this is a bounce from the bottom or whether it's just a relief rally in a bear market. And they're 2 very, very, very different things, aren't they? And that's where if majority of people are thinking this is the bottom and they've deployed all their capital, well, they're going to get caught out, because it could just be a small minor relief rally in a bear market, and we do see lower. And that's sort of in other stock markets as well, not just cryptocurrency. So just something to be aware of. But
it's a weird feeling, isn't it? Like, we've got some DCA, buys that we actually wouldn't mind picking up, and half of you is kind of like, you want the market to have that last little pull down so we can pick those up. But at the end of the day, if things rally, we've also got plenty of positions for it to take off further. So I guess that's a good position to be in a win-win.
Yeah, definitely. Okay, so just moving on. I just wanted to touch on and some of you more minor experts can touch on this as well. But yeah, since July 2022, we've actually seen, almost 70% increase in mining revenue within a month. I think what's really important to point out here is miner capitulation isn't that different to cryptocurrency capitulation. People buy high in the crypto market, they panic when it gets to the bottom, and they just instantly sell off their holdings. And before you know it, the people that sold at 17.5k BTC, it was pretty much at 20k pretty quickly. There's a lot of people I know from our experiences that obviously have wanted to turn their miners off straight away when we reach those levels. They might have had their miners off the last month, the last 2 months, and they've missed out on their miners coming back in profit, and they've got them switched off. So, yeah, I guess it's obviously been a multitude of factors that have sent around that have caused this kind of investor sentiment. But yeah, you can kind of see the miner revenue decrease. But
I think on that, it's so important. It's a great thing to see the mining revenue come up, right? And you can understand the situation that people are in when things start to get a little bit negative, and is it worth keeping it on? But it tends to show that in the long term, you need to kind of be in the mindset to stick to the investment from the get-go. You need to understand that things are going to be volatile, and you need to relay it back to your initial strategy. And your initial strategy isn't to be selling Bitcoin every day. You're not mining that Bitcoin and selling it at the dollar value on that day. You're mining it and selling it in the future. So, as Mitch said, there's been a few clients, and there's nothing wrong with it. If you're not comfortable with it, or if you can't facilitate those power bills, and you had to turn your miners off, that's fine. That's something that you just had to do. But at the end of the day, now that miner might be in storage, take another 2 weeks to come back online, and you kind of chop and change too much. So we had a lot of people cancel, turning their miners offline, which was really good, and initially see a bit of a freak out and kind of came to terms with it and understood. But overall, the best thing here is that the returns have come back up, and it's a good opportunity out there still.
And I think that's the best thing with mining, is that you are actually taking that emotional side out of it. Do you know what I mean? If you'd invested $1,000 or whatever it is into Bitcoin and it dropped to 17, you'd obviously be knee-jerked into wanting to sell it. Whereas, with mining, you've taken that away. It's just passive, set and forget to a degree, which is kind of the perk of it.
Exactly right. You're just picking some up every day. If Bitcoin drops to 10,000, you're picking some Bitcoin up at that lower price. If it goes to 200,000, then you're picking some Bitcoin up at that price.
Well, exactly. At the end of the day, that Bitcoin's only worth what it is when you want to sell it. So if you're selling it every day, you're going to sell it for a lot less than what it's going to be worth in 5 years.
Whilst we're on that, just a really quick note, for those of you that are familiar with our compound mining strategy calculator, we are actually adding an addition to that, which will enable you to be able to set what price you want to sell the Bitcoin at. So right now it does base it off, today's price, and going forward. But if you want to set that I'm only ever actually going to sell my Bitcoin at 40,000 or higher, or I'm only ever going to sell it at 60,000 higher, it will change the whole look of the strategy for you. So that's an addition coming later. But back to you, Mitch.
This is just that kind of, if you want to read this, it's a little article just on Scaramucci talking about kind of macroeconomic factors in Ethereum and the merge and what this means for price action and what we could potentially see. I won't read through this, but it's a good read for those that want to take a quick look. What we will move on to is actually the merge.
I think we might actually, whilst we're still on mining, we'll pass it to Theo to go through the altcoin mining and a bit of mining, and then we'll come back to merge as well.
Cool. So on the back of the obviously 70% increase from those lows, I think it was the total revenue was 13 million in BTC to 23 million, which is a considerable amount, and that was the lowest day I think recorded in 2022 in terms of Bitcoin revenue mining. And that also coincides with pretty much a lot of the big publicly traded Bitcoin miners. They've seen double in a month as production ramps up, and guys like Marathon Digital, their stock price is up in 30 days 124%. You've got Core Scientific 110%, Riot 96%. So obviously we've seen things turn around, and I think it's also to do with the cost of the price of the actual equipment coming down, and people are able to expand on their setups due to the cost of the actual mining equipment itself. And a couple other things that I sort of found myself, even with those publicly traded miners, some of them had the option last year to actually purchase, you know, like advanced power for a year, but most of them didn't choose that option because based on the time last year that there was a trend of the actual power costs coming down. So therefore, it actually put them in a position where now some of them have actually sold some of that power back to the grid for almost to the tune of like $9.5 million. So they're not only, you know, there's a lot of these publicly traded companies that are able to pivot and do these different things, which is cool to see, to obviously offset that. And Texas is also known for having power outages through, you know, times like that, a high heat and these types of things. And also there was a question this morning, and if this might be relevant for some people that got the same message. One of my clients, Ryan, he got a message from F2 Pool messaging about fees for RVN. Now that doesn't affect any of our miners. It's for Raven payouts. So none of our clients mine Raven. So anyone that's sort of listening to this that is part of the community that got the same message, obviously it's irrelevant to you guys. And in terms of altcoins, obviously that was one of the questions: is there any profitable altcoin miners? Well, matter of fact, there is, and we've actually got access to pretty much the most expensive miners, from my understanding, in the industry, being obviously the Kadena miners, KD Maxes, right down to the lights. We've been able to, you know, I think at one point the KD Maxes were going for about 75k Aussie, so they've come down a considerable amount. And looking at, obviously I'm not a Kadena maxi, but some of the key points that I know about Kadena is two of the main founders are from JP Morgan. So obviously a big financial institution backing. And it's currently, the current market cap of it is about 775 million. The all-time high was about close to 4 billion. So you can sort of understand, if you got a big outfit like JP Morgan, they're probably not involved in a game of losing money. They're probably playing the long game, and the current price of that token's down about close to 80 to 90%. And even with that being said, me and Taylor sort of worked out the actual, you know, profitability. It currently sits at about $35 Aussie on our power net. So we're talking about a payback period on ROI of roughly about 11 to 12 months, which is very good considering we're at
the market.
Yeah, the bottom of the market, you know. So
pretty decent for a 12k investment, a 20k investment. You know what I mean? Like if you can generate that back in 12 months, that's pretty good.
Yeah, and then if it goes back up, and geez, you know, we've got a 75k miner. Look, that's 75% down on its, you know, peak of its price.
We were pretty lucky with the prices that we got on these miners as well. I mean, they were hard to secure down. But we've got them at a decent price. We've sent an email out to everyone as well. So if you're not on our email list, you can subscribe to that on the Mining Store website. Or if you want to get in touch with Taylor or Theo, go ahead and get in touch and they can run you through all that.
And we can host them too. Like there's been countless people I've spoken to over the last even 8 months, and I wish I kept all their numbers, but yeah, there's like, just to let everyone know publicly that, you know, we can host them as well. Which is a pretty good option depending on your risk appetite towards, you know, that sort of altcoin asset class.
All right, guys, sorry, we had a bit of a technical glitch there. We're back though. So the next thing that we're going on and talking about is the Ethereum merge. So this was actually one of the questions we had from the community, and probably one of the major talking points that is actually going on in the general community for cryptocurrency at the moment. So essentially, what this merge means is we're going to get the beacon chain, which is the proof of stake version of the Ethereum network, merging with the original chain, which is the proof of work. And that's going to stop any mining continuing on from here and forward. So a bit of history on Ethereum, you know, back in the day when it first started, similar to Bitcoin. You know, the market was nowhere near as big as what it is now. There was nearly as many people using, and they probably weren't sure of the scalability and all the rest of it. It's still very new technology. And one of the biggest implications that we've seen on the Ethereum network is actually how much hashing power it's using. And the Ethereum team have made the decision that they don't want to have that much computational energy being used. They want to go, I suppose, a greener option and move towards proof of stake. So that's basically what's going to happen here. We're going to see that move across. Now, a lot of people think that that's going to reduce gas fees, that it's going to speed up the network. It's actually not going to do these things. And Mitch is going to touch on a couple of these misconceptions. But what it will see happen is it will see the mining come to an end. Now, maybe in our future podcast, we might jump into what the implications of that is going to be on the mining industry, particularly on different coins that can mine on the same algorithm that Ethereum does. But Mitch, do you want to just touch on maybe some of these misconceptions if I haven't touched on already?
Yeah, I think a lot of them should be known to most people, particularly those that, you know, been invested in ETH for a while. But I guess the number one biggest misconception is people automatically think that because we're moving from a proof of work to a proof of stake, our consensus mechanism, that it automatically means gas fees are gone, or that they're eliminated. But it's actually a huge misconception, because I've heard some people say that they'll even worsen. I don't particularly think that that'll be the case, but I think it'll obviously come down to, like you said, the scalability, how much better it's going to happen, and then how many people begin to use it. Because we know in these bull runs, particularly, you know, when you find the NFT and DeFi protocols and markets will pick up again, you know, Ethereum will be getting absolutely smashed because it's the go-to. But so essentially instead, it'll require work on expanding network capacity and throughput, something you touched on. And yeah, there is kind of a roll-up centric roadmap to make transactions cheaper, but I think it'll be a kind of watch this space. You know, it won't just happen as soon as the merge happens, but maybe a bit later down the line.
Probably the only other point there is also those of you that are staking, whether it be through House of HODL or you're doing your own staking with your 32 ETH, that won't be able to be withdrawn straight away. So withdrawals won't happen straight away. It needs to wait till the next hard fork. Apologies if I pronounce this wrong. I believe it's pronounced as Shanghai or Shanghai,
Yeah.
whatever
I've highlighted it there. It's that information there. So 6 to 12 months after, you'll probably most likely have access to it. That's after the merger. And validators aren't able to withdraw until after the Shanghai upgrade, like Will said.
Exactly. So we'll
on
release
that as well.
information of when that is available, just to keep everyone up to date. But Fez, you had a couple points there you wanted to jump in?
Yeah, I was going to say, just on the Ethereum merge, there's probably going to be what we call buy the rumor, sell the fact scenario. So leading into this event, there could be a big rally on ETH and other projects that are built on the Ethereum kind of blockchain, I guess. So just be careful you're not buying into too much hype at the top. Generally, once the announcement does occur, there could be a sell-off afterwards, some profit taking. So just be aware of that kind of FOMOing into ETH leading into the event.
Yeah, I touch on that a bit when we go to the technicals, so we'll discuss that then. But just the other two ones are, the transactions becoming faster and resulting in downtime on the blockchain. You know, what's the incredible thing here is that it's probably, I guess, the greatest, would you call it, shift of technology ever in the history of technology, like this movement. Because people downplay, or they don't understand how big Ethereum is. Correct me if I'm wrong, but I'm fairly sure Ethereum processed more transactions than Visa last year, or something. It's been some crazy fact like that it's been able to. So, there's a couple of the misconceptions you can read there, but it's good, you know, if you're heavily invested in Ethereum and you want to keep an eye on the merge, to keep these things in mind and to really understand what's going to happen. There's a couple of other things. Kevin O'Leary, he's a Mr. Wonderful for those people that know him, that infamous on Shark Tank. He's a big investor in crypto as well. I think one of his favorite projects is actually Polygon, which we've seen handsome returns on recently. So, but he just talks about regulation here. If you want to pause and take a read, he talks about how, you know, Tornado Cash are kind of a part of that crypto cowboy culture that, you know, probably leans towards Do Kwon and these kind of risk takers that do these codes and blockchains and stuff that, you know, can be maliciously used or attacked. And he kind of just points out here, you know, if we're to move forward and if institutions are to truly become a part of this game, then they need things like Tornado Cash gone, because they're highly risky. They don't make too much sense with regulation. And then I guess the argument here is that a lot of people find is that it's pure decentralization, right? This guy just wrote a piece of source code. He didn't write the source code for Tornado Cash on the Ethereum blockchain for people to use it in a criminal sense. I mean, maybe he did, maybe he didn't, but it's literally just a piece of source code he's written. And he's been arrested now. I think he's had his accounts, like we mentioned last week, shut down on GitHub or a couple of other places. So yeah, it'll be an interesting watch.
I'm a subject to that as well, Mitch. I didn't know if anyone noticed, but Do Kwon did a giant interview, so it's a good watch.
I did see that. I'll have to watch that.
It's interesting.
And just on the mergers there's also a Bellatrix fork, which will be performed on the 6th, just before. Is that right?
So
I think there's the Bellatrix fork, which will be performed, implemented software needed for clients. Yeah, the 6th of September, just 10 days before.
Okay, well, there you go. Yeah.
Then the merge will happen, and then after we'll have the Shanghai fork as well, that'll be when the withdrawals will be able to happen.
Okay.
It's everyone's projection.
It's always the $1 million question, isn't it?
Yeah.
Yeah. So just moving on, we'll move on to some Bitcoin and Ethereum technical charts. I won't dive too much into the kind of indicators and patterns that are playing out, but I think two things that are really important to show is this thing here. So there's been a very interesting market movement across the last 2 months in monthly Bitcoin volume traded into fiat or stablecoin. If you take this chart, you can see that the volume trading fiat or stablecoins over the last, particularly the USDT, has been huge. So yeah, in July we saw pretty much one of the biggest surges in this. This is kind of inferred in that bottom wick of the market being taken out and everyone quickly selling into stables. But yeah, so there was probably 200 billion worth sold into stables in that month, and it's higher than any projection expected. So that infers the panic, the capitulation. So what does this kind of mean for the next few months? Well, we've spoken before about how much money is in stables at the moment in comparison to prior bear markets. I think if you go back to the 2018, 2019 bear market, when everyone was out of the market, they were out of the market in the sense they didn't even have money in stables. Everyone kind of lost out. No one was sitting there ready to launch as such. Whereas I think this time around, you've got, hundreds of thousands of retail investors right now sitting on the sidelines, which is both a good thing and a bad thing, right? We touched on this last week. You don't want to miss out completely. Everyone, it seems like a lot of the general retail investor right now is saying, oh, I'm waiting just for that, one more lower, or, it's going to go to 10K, it's going to go to 9K, it's going to go to 13K, wherever you think. But, you really want to start DCAing at these levels, because I think in the Scaramucci article, he mentions, if you truly believe, which most people I think do, that invest in Bitcoin, if it's going to 300,000 in say 5 years, are you really in 5 years going to be hating yourself for buying it at 24,000 rather than 22,000? Exactly. Are you really going to be upset with yourself for buying it at 21,000 instead of 17,000? It's not a huge difference. And if you believe in the cryptocurrency and particularly Bitcoin in the long term, then it shouldn't be a huge deal to you.
It's all on that. It's just really Bitcoin is just, you're storing value for purchasing power in the future.
Yeah.
It's essentially what you're doing.
Yeah.
Instead of like getting $100 of fiat and then obviously inflation deteriorating that in the purchasing power on that on a year or two is obviously going to be a lot less than what it is today.
You need to understand that kind of storage of value when you're looking at Bitcoin, and if you don't, then you won't ever appreciate why Bitcoin can hit to $300,000-$500,000. So yeah, definitely interesting stuff to look at. Just quickly as well, on that chart there, we can see the amount of USDT that was converted from Bitcoin in July is quite substantial, right? But when you actually look at US dollars, it's smaller than the previous months. And that kind of tells me that, similar to what Mitch was saying before, like in the 2017, people were probably moving from Bitcoin, Ethereum just into, fiat currency like Australian dollar, US dollar. Whereas now they're moving into just the sidelines. It really highlights that, that there's money literally sitting there within a click of a finger. It doesn't have to go to a bank and then into this ecosystem. It's like ready to be deployed.
Yeah, what it means is it just means that the purchasing potential is just so much higher than any point across the last 12 months or even across the last 4 years. I'm fairly sure that right now would be the highest amount of money that's ever been in stables probably in crypto history.
Definitely.
Rather than, like Will said, just people withdrawing it to their bank accounts and sitting in fiat. But yeah, we'll quickly move on. I'll touch on this Bitcoin. There's a rising wedge forming. Well, that's been playing out. It's very similar to the one on Earth, almost identical. For those in the trading academy, you understand what a rising wedge is. It's just a trading pattern and an indicator. If a breakout would look something like this, we've got the point of control here. Point of control is where the highest amount of volume is for this trading period, and then there's a huge order block here. So, if we do break down of this rising wedge, you could see maybe something like this happen. Or on the contrary, fly up, because there's hardly any resistance once you get past 26k or so to that 28 to 31k, 32k level that we traded at for a while. So yeah, and then I won't dive into this too hard. We've still got a bear flag playing out. You can pause the video if you want to take a quick look at this. We go over this almost weekly because this is playing out from almost here to here, and but that's another month or two that we've seen this for, probably a month and a half. So yeah, I wanted to get a really good perspective on Ethereum's options open interest here. I think it's really important to look at, you can dating back to here to here to here. That's that kind of bull run in 2021. And now it's pretty much reached an all-time high recently, which is $8 billion, which is slightly short of November 2021. Where the market was completely topped out. But just remember contextually where we are in the market right now and what that means to when Ethereum was in November 2021 versus right now. So essentially what it means is that extremely high number of retail and institutional traders are currently active in ETH positions. You've probably got a lot of people trying to catch longs on it. I'm sure, each time it's reaching that $2,000 mark, there's a ton of people trying to short it. But yeah, since we've kind of broken previous option interest high with volume, this kind of means that we're probably likely to see a continuation in S price over coming weeks if we don't see a complete market breakdown. And what I mean by that is you see it outperform pretty much everything as we go along. If Bitcoin goes up a little bit, you see Ethereum go up a lot more. And this includes outperforming most alts as well. Usually Ethereum being the number one alt leads the alt rally, but you see those other alts pick up a lot faster than ETH does when they follow ETH. So, but we're not seeing that at the moment. ETH's kind of almost outperforming all these alts too. So yeah, there is a midterm correction possibility that we do revisit 1500, 1600 or that area, but then we could probably, with this much open interest, you could see it exploding at any point. And I mentioned here, like Tony said, it's a rough estimate, but, we can see a situation if, say, in the next 2 weeks, we do see that midterm correction pullback off the back of some macroeconomic stuff. Well, we could see that explosion from there as people, buy the hype and then eventually, sell the fact once it happens. So you have to be prepared for anything. And I think Ethereum's one that's really hard to read because of the merge and the recent price action. But yeah.
I think a good one to look on that as well is if you go and look at a chart of ETH and BTC, Bitcoin and Ethereum, they move in a positive correlation. If one goes up by 10%, the other one probably is going to go up by 8 to 15% or whatever. And right now, Ethereum has taken over. It's pushed on a lot more. So you could probably expect in the next 2 weeks, 1 month, 2 months, whatever it is, for that correlation to come back. And hence, showing that this is more of a buy the rumor, sell the fact type of scenario.
And we showed that in last week's. Just on
the Ethereum versus Bitcoin scenario, you've really seen a lot of a rotation into Ethereum. The Ethereum dominance is up around 40% from the start of June, whereas Bitcoin's dominance down around 15%. So it's kind of a battle between the two titans at the moment. And I think there's been around 180 million worth of institutional inflows into Ethereum over the past couple of weeks as well. So institutions are really kind of backing Ethereum going into this merger at the moment.
Perfect way to say it.
Yeah, I was just going to say, if you guys want to take a look at that chart or have a read on that. In last week's podcast and update, I showed you the Ethereum dominance and Bitcoin dominance charts, and we showed all of that already. So you can take a look at that. Next point, just the ETH gas prices. I don't know if any of you guys particularly have used ETH recently. I have. I think my gas fee was $4 or something thereabouts, or something ridiculous like that, and I was amazed at how cheap it was. Essentially they've reached their lowest point since July of 2021, 13-month low, and they've kind of remained extremely low even after seeing, ETH go from 900 back to, the 2000 level or the 1900 level that we're currently trading at now. This could also be another indicator for what's to come. If we see ETH and alts gaining midterm bullish momentum, once we break above a certain level, this could take these gas fees to a crazy level, particularly, as I mentioned before, once people move to ETH and proof of stake and the merge, and everyone starts using the Ethereum blockchain again, these gas fees might not last. But, it is a bullish outlook in terms of our investments in ETH because, we always want to reiterate, despite if we think there's a pullback to 1500 to 1100 to 1200, we're always bullish in the medium to long term as one of our best holders. And it has been our best ROI coin, I'm pretty sure, in recent years, or one of. And we think that'll continue as well. I'll quickly just show the Ethereum rising wedge, very similar to Bitcoin, from a very similar kind of time frame where I've showed this the last few weeks. We're coming towards really important resistance levels from up here. This could be where we potentially see that apex reached in the rising wedge and then a downturn, but that remains to be seen. But that's essentially it for today on the technical side of things. Does anyone have anything further to add before we wrap it up?
I've got something, but it's just to do with Bitcoin versus traditional assets, just in terms of like an updated version. So like this is a Bitcoin versus all traditional assets ROI versus USD. So basically, on the year, Bitcoin is against them down 47%. But in year 2, we're talking about a positive of 107%, opposed to gold being on year 1, 2%, S&P down 6%. So on the year, it doesn't look good. But if you start going past 2 years, 3 years, 4 years, Bitcoin is up substantially. So you've got, even as far as 5 years, 467%. On the 10-year, we've got 1,087,000%. So some ridiculous types of returns if you look at that long-term time horizon. This is why it's important. I'll try and maybe post it in maybe the market update. I just sent it to you there, Mitch. But yeah, it's obviously really interesting. You can see it on Discord there, yeah. But basically, point being is over the long-term time horizon, Bitcoin's outperforming every other asset there is on the planet.
And it's just a classic volatility, right? Bitcoin might drop 60%. You won't see that happen in the stock markets, but over time, if you're comparing it from year 1 to year 3, it can go up 1,000%. You also won't see that happen in the stock market. So, as time goes on, it becomes more of an accepted asset. It'll lose that volatility, and it has if you compare it back to years and years ago. But again, that's why we really encourage people to take a long-term view on their cryptocurrency investments. Mining does that for you, but it gets rid of that, panic sell where you buy it 40,000 and then you see it drop 50% down to 20,000 and you end up selling all your Bitcoin. It's just not the right way to do it. You need to understand you're in a highly volatile, but long-term good storage of value investment. I think that's pretty much it for today, guys. Pretty stacked episode. Obviously, we love the questions coming through as well. It gets a good conversation going, and that's essentially what we're doing. We're trying to answer some questions for you guys, keep you guys informed as best as possible. So if there's any other topics that you want us to cover, make sure you send it through to us. Unless anyone else has anything to touch on before we finish up, I think that's a wrap. So thanks for joining in, guys, and we'll be back next week. Cheers.
Thanks, guys.
Cheers.